Hello, everyone, and welcome to another edition of Bleeding Crypto's market update. This update is going to be on Bitcoin. Today is Sunday, September 8th, 1:07 p.m. local time. I apologize, I have not made a video in a few days. I was really sick, can barely actually speak. I would go into a coughing tantrum every time I try to do any type of talking or video. So I've been getting some rest. I feel much better. So I wanted to give you guys an in-depth analysis on Bitcoin and what I'm seeing. So this may be longer than our normal 15-20 minute video. So I just want to give you a warning. So if you like to put this on 1.5x speed, you can hit the little settings toggle wheel, put 1.5. This way you can hear it quicker. Let me start off by giving my disclaimer. I am not a financial advisor, and this is not financial advice. This is to be used for entertainment purposes only for your fantasy paper trading. All right, guys, we're going to leave off. We're going to start where we left off, better said, from the last video that I made. In the last video that I made, I don't know if you recall. If you don't recall, go to my timeline and take a look at it. But I know we were on this candle here. So it's been 1, 2, 3, 4. Yeah, wow, 4 days. Yeah, 4 days since I've made a video. It was on this candle here. And I was telling you guys that we're looking at the harmonic pattern. The completion of the harmonic pattern was here. And I told you guys that within a margin is where I want to see us finish out this harmonic pattern, whether it be here on this bottom of this channel line or a little bit below here. But this was too high for me. So please, again, listen to that video and listen to the point of what I made about this here being a little too high. So I did anticipate some more downside. 1-2 days later, so a couple days ago, you can see here where we completed the harmonic pattern. Now, the interesting thing about this, you guys know that when I put support and resistance, how much I rely on those candle bodies. And look how amazing this is, guys. Look at the completion of the harmonic pattern that I was talking about, and look at the completion. Also, guys, if you want to go back a few videos, maybe go back to this video here on the 29th or even on the 30th. The further you go back and you listen to what I was looking for, it's going to really help you guys understand how to view the market and what to look for, especially when you do it a few days or even a week before, and then watch the progression and how it plays out and some of the things that I'm looking for during those progressions. I think that's a good for those who want to learn, better said. All right, so you can see here we got a nice beautiful candle body right on that line, and we broke below the channel line again. However, you guys know how much I like backtest, and look what we've done for the past 2 days. We cannot break above this line here. So once again, we are falling below a very strong area of support. We're not turning it into resistance. However, I am at a difficult position right now, and let me explain to you why. You guys already know that when I do these analysis, I can't afford to be a moon boy, and I can't afford to be a doomster, one of those pessimists that think everything's going to go to 10,000 and 5,000. It's not in my nature. I got to allow the market to basically dictate to me by forms of validation and invalidation on the direction of the market. So first of all, when you complete a harmonic pattern, whether it's to the upside or to the downside, there's usually a move that comes with that. And that move is basically a pivot. So in this particular instance, since we dropped to the downside, I'm looking for a pivot to the upside. Now, we did drop below. So if you take this into consideration, let's see here. We'll take a look. We'll take this here. We take this here. We take there. We had a little 4% move. Not worrying about where the condition of the market is, guys, this is not enough, okay? What I typically look for is going to be either at least a 50% or a 618. So, and again, it would work both ways. So what I mean by that is I'm going to take a fib rule. I'm going to take it from the bottom here from the swing low, and I'm going to take it from this swing high, which is where the CD portion of the harmonic pattern. This is the AB equals CD. So if you take it back from the C to the swing low and you move this over, here we go, and you switch it to a lower high rule. This is where I would be anticipating the price action to go. Now, before you start hissing and throwing a fit, you have to understand, guys, I understand that the market looks weak, okay? It doesn't change the rules. It doesn't change the fact of what normally happens after drops like this. So putting your bias aside, putting your feeling aside, the data is telling me that this is what needs to happen. And this is, no, actually, that's not a good way of phrasing it. This is what the data normally shows us that happens. Normally, not 100%. So let me go through the data of what normally happens. And then if it doesn't happen, I'm going to also talk about the invalidation and what I'd be looking for to the downside. So this way we're covered both ways. Because at the end of the day, I don't know what's going to happen. I don't know if it's going to go up or it's going to go down, but I know what it normally does. And I know what I'm looking for if it doesn't. So at this point here is I'm looking anywhere between this 50% right here and this 618 in this area here. So I guess you know what would be a good idea if I do? I'm going to do this. I'm going to put a little box just to not crowd our chart and give us a little bit more of a clear, concise box of where I would like to see the price action go. Actually, you know, I'm going to leave this here. I'm just going to leave this here for now, just not complicated. And let's start moving forward. So I'm looking for a move up into the 618. Anywhere inside of this box between 618 and 0.59, excuse me, 0.86 at 59,339 or 57,886, 57,884, excuse me. So what I do now is just like any type of, I guess like a detective, you're looking for clues, you're looking for evidence, but not clues. You're looking for evidence that will support a move to the upside. As weak as things look, what would make it go up here? For me, number one is the completion of this harmonic causes a pivot. Okay, that pivot, reason number one. Reason number two, I need data that will give me better confluence other than just what it normally does to give me a reasonable amount of confidence to go up there. And the second piece of data that I use, guys, is going to be the DCT heat maps. Because the DCT heat maps, I know you guys been looking at it, and I've been showing you guys the accuracy of that data and how the market makers like to go through those areas because that's how they get paid. That's how this market makes money. This market doesn't make money by making you money. It makes money by taking your money. So these areas here are the areas where people are holding a large amount of contracts that they're betting against. They're betting against the market makers, and the market makers can see it, and they control all the money, all the liquidity. They have all the supply, but you want to think you're smarter than the market. So these here gives me a visual of the intensity of where those pockets lay. The two biggest pockets right now is going to be these two areas here. So between 55,146 and 55,900. So I'm going to do this. Let's put this area on our chart. This is another area here of interest. This is just a little bit higher in dollar value than here, but this is just as valid as any other type of heat cluster. Just this here takes precedence not only because it's below it, but because it has a higher dollar amount. So I want to put this on my chart. Let's see, 55,150, just to round it up. 55,150. So let's do this. I'm going to put this here. I'm going to put 55,150. I'm going to put DCT heat. I'm going to put it in yellow just because yellow is what I assign liquidity clusters. And then I'm at the top of this was 55,900. So 55,900. Let me make sure I did that right. 55,900. Okay, perfect. So we're going to do 55,900, so 55,900 and here, and then I think, you know what we'll do just to make it easy so I have so many lines, I'm going to utilize this. I'm going to take off this magnet for a second. I'm going to create this little box here, and this is going to help us understand that in this zone here, we have a liquidity. Boom, I'll put it in yellow, and then I'll just get rid of these two lines. This way we don't need these lines. Okay, so this represents an area, again, of interest for that DCT heat. And that's local, and that's, within reason. Now we're going to utilize this next big cluster here. There's a very big cluster of liquidity that starts from, I'm actually going to use the ending of it, again, just to minimize the amount of distractions on our chart. 56,802. 56,800, just to give, again, a round number. 56,800. 56,800. So let's do this. 56,800. DCT heat. Okay, perfect. All right, so we've got that there. So now we have an area here that, again, fits into, I believe this would probably clear that 50% level that I told you in the beginning. I told you there's two levels I'm looking at, the 50% or the 618, and the 50% would be this. If I were to use the continuation rule, look at that. Oh shit, that's crazy. That actually lines up really nice with the 50%. Look at that, guys. I can't make this shit up, guys. This is incredible. All right. So, but again, just for the simplicity of it, I'm going to use the continuation, the lower high rule, because, I think the DCT, since it overlaps here, it gives a really good area of confluence, and I still think that it's very valid. This way we don't have a bunch of different things on the chart. We already know that this has a really strong area of confluence. This is a normal lower high rule, and we're able to encompass both either or of that I'm looking for. So if we were to come up here, take this out and roll over, it would make sense. They came out and take out that major heat. And if we go up to here, we're following the normal lower high rules. The normal lower high rules means that the price will come up after a dip, and after it's fallen from the previous lower high, that it will come in and respect 618, 706, or 786 as its point of pivot before going down and putting in a lower low. So hopefully you guys have been following. Hopefully I was able to explain that in a concise manner where it's understandable. Now, besides the DCT, I told you guys I'm a very big fan of high block when it comes to showing me the individual contracts, because those individual contracts also carry a lot of weight, and you really get to see a good visual of those particular contracts that are inside of these heat clusters. Now, this heat cluster here is just a 3-day look back. So for the past 3 days, this is where the concentration of those contracts are located in the past 3 days. Now, these contracts here show me the specific contracts. You see these lines that move out to the edge here. The longer the lines, the bigger the contracts. Look down below, guys. Look above. You're a market maker. You're going after the money. Where do you think the money is located? Again, remove your bias. Forget about that market tweak. Yeah, we already know that. I'm telling you, just look at the facts. Where are we? Look at the delta. $16.5 billion worth of contracts to get liquidated, accumulative. So it goes again to start shifting and start helping us understand where those probabilities lie. I'm not telling you that the market's going to reverse and go back to the all-time high. I'm just telling you, after a move like this, it's normal to put a lower high. But I need more than just hope. I need more than just normal. I need more than just one fib to give me the confidence that playing it to the upside is the right move. I need more than that. This is another reason. This is another reason. This is another big reason. And look at some of these big contracts. Like, for instance, let's take this contract here. Look at the size of the $247 million contract to get liquidated. Short liquidation contract at 57,406. Where's 57,406? 57,406. 57. That's right here. Look how close we are to that lower high roll. Now let's pick another big contract. Let's take one of these lines. This line right here. Let's see what this line. That's this big bubble here. $247 million contract as well. 58,533. 58,533. 58,000. That's right here. Look at this. I'm going to go ahead and put this on here. Again, I can't make this shit up. 50,000, 58. What did I say? 58,533. 58,533. 58,533. And that is I think I said $247 million liquidation contract from High Block. We'll shorthand it there. All right, perfect. So now, do you see how I'm building that case, guys? Do you see how I'm not using my bias one way or another? I'm just using the facts. And even with all of these facts, it doesn't mean it's going to happen. It just means that the facts point to the upside, to a reasonable upside, before going to a lower target. Because even if we do follow this, I am still looking for lower. Guys, there's 2 points down below that I've been waiting for. I've got members of my $25 a month Telegram channel, my Signal channel. I got members from my Discord channel that I've been talking about. And I've even touched it with you guys in the previous videos. 51,500 and 50,000 are two very, very strong liquidity areas. I even posted over the weekend that I believe that we're going to go to 51,500, possibly sweep the low, and then go back up to the top of the range, which is about $67,000. While people are calling for 30,000, 20,000. It's just, I mean, could that happen? Yeah, that could happen. But again, do you see the mentality of people? They go from here to 30,000. Their brains can't compute how markets work. Markets are not going to puke $20,000 just because they're feeling scared. That's not how it works. There's too much money on the line. And that's what people can't comprehend. This is a business. All right. And unless, well, I don't know if you have to know about business to understand this, but I would think if you ran a business, you would understand that. Less people who don't run businesses, people who probably punch in a clock, who don't really understand the principles of having a business. It's hard for them to understand that the market is not in a hurry. The market knows what it's going to do. It has all the control. And when you're tempted with this much liquidity and this much money to be had, they're not just going to shy away at it and go to your target because you want it to happen. That's not how business works. And this is a business. So there is an area here that I'm considering that can happen before we hit those higher targets in this little cluster right here. This little cluster right here, the end of that cluster on the DCT is at 52,000. I'm going to just round it off. It's 888. I'm going to round it off to 900. 52,800, excuse me. 52,800. I'm just going to round it off. 50. Did I say 52? I think I meant 53. Hold on. No. 52,800. Yeah, that's right. I was right. 52,800. 52,800. So 52,800. So I'm going to give you a little path of where I think what may happen. It may not happen that way, but let's just humor me for a second. I think I've done a pretty good job of earning your guys' trust and been able to call this path pretty accurately. And again, if you're new to listening to my videos, I have on my timeline on my profile. Feel free to just look through and watch these videos. Pick any one you want and tell me that I don't have a good idea of where this pricing is going to go. I challenge you to call me out and tell me that I don't know what I'm talking about. So looking at this data that we have here, looking at this data, I can see the story. I can see a story playing out in a couple of different ways. Let's start with maybe coming down here, sweeping this here, okay, sweeping this, and then coming up into this area here. Now keep in mind that it's not going to, give me 1 second. Keep in mind that it's not going to go one candle here and one candle there, all right? It's going to come down, up, down, stair step its way up, back in, but you guys get my drift. We're going to start here, maybe tomorrow or tonight here, and eventually here. A lot of action is going to happen in between here, all right? That basically and this line here as far as what day, I'm not trying to line it up to any type of day. I'm just giving you direction of where I think it may go. Now, This here, I could see because of this. If we go to the smaller time frame, you can see here where we pushed up. So what happens when people see a push up like this? They're going long, right? They're going long. So what better way to knock out the small amounts of longs that we have, which isn't a lot. Look, it isn't a lot. It isn't a lot in contracts, but there's still some money there to be made. Look, there's a really nice juicy contract here at $86 million at 53,040. 53,040, 53,040, 53,040, 53. Right there, look, really close to that end of that liquidation cluster that we saw at DCT. So you get my drift, guys. You can see this can be, I can see this happening to not only to liquidate those contracts that are there, but to get people to jump into more shorts. Why would the market makers want to do that? Why would they want to trick you to go into a short if they want to go up? Do you see what I'm getting, guys? You've got to start thinking like a market maker. You got to start thinking like the people who control this market. What would you do to maximize your bottom dollar? Push it down and then go after all of these. And I'm using this as the best case scenario. We may just pivot here or we may just pivot here. But I can see us going up to here. And because this is a very good area here, in the beginning, I told you I'm still looking for lower targets. So whether it's here, 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 or here, I am not expecting us to go to the top of the range again, guys. I'm expecting a pivot to the downside. I just don't know which one of these is going to be the final pivot area. Hopefully that's the clearest way to put it. Now, getting there, I think there's going to be some clear signs. So let me tell you what I'm talking about. Let's say this is not going to play out to the downside. They're going to wait for this, and they're going to let this build up. These are long contracts, and let that build up a little bit more, and they just go after the short ones first. Well, it's going to be. I think it's very clear, very, very clear. I'm going to zoom in here. We're on the hourly time frame. Remember what I told you guys about back testing. Remember I told you about resistance and support. Look at this. We broke through here. What do we do? Back test, back test. Look at these candle bodies above the line. We broke down again, and look at the way it back tests. Absolutely perfect. We dump out. We come back up. Look at this. Look at the beauty of this line here. Look at the respect. We finally break above it. Look at the way we back test the bull break. Then we lose it again. Look where we end up. You want to tell me that this is I've been showing you this in every single video that I've done throughout the chart and how perfectly it plays out. Why is this important? Well, it's important for us to understand that this zone here, this zone right here, between here and here, has been the deviation where we're getting smacked down. So this can help us that if we go back in here, we can say, hey, this may be another deviation because we've already broken and closed above it and confirmed it, but continue to fall below it. We did that here, we did that here, and we haven't done it here. So if this was to push up and go in here, it helps you to stay grounded. Not say, oh, okay, there we go. We're gonna go to BC said we're gonna go to 57,000. No. Look at where we've gone all the way up to. So think about how you would feel if we finally break above here. And what do you think is going to happen? You think we might back test this here? And if that back test holds, do you see how you can now start having the confidence to taking a position and getting in front of that move? Because look, guys, every time we take a trade, what's your fear? You don't want to lose money, right? How do you avoid losing money? Actually, I'm sorry, that's the wrong way of putting it. How do you minimize losing money? You can't avoid losing money in trading, okay? But you can minimize it. You can minimize it by putting factors, the odds in your favor. Sure, you can take a position here, but you also have this to the downside to think about. Now, if you use a reasonable amount of leverage, you don't have to worry about it. And when I mean reasonable, you use a 5 or 10x, you're fine. You're not. You use a 20x, yeah, you're probably going to get liquidated. Or you're going to be so far down under that it's going to be really uncomfortable, really sticky. You don't want that. So why not wait? Why not wait to have the odds on your side? You think the odds will be better if you were to wait for this to break up You wait for this to come down here. It holds. You go to the 5 and 15 minute time frame, and we're consolidating. That may be a good area to say, hey, you know what? Okay, now we're looking for more upside targets. Now we've finally broken above here. It was more than just a deviation because we broke above the swing, the local swing high of this weekend, and we're holding. Or let this come down here. You have this on your chart. We take out this heat. We stay here as support, and we start climbing higher on the smaller time frames. Maybe we put a W, a double bottom, some sort of structure that show, or maybe we bounce and you look for the higher low. And on that higher low, you say, that's my trigger. It bounced off the higher low, the continuation rule. It starts going up. You take your position. Yeah, you didn't catch the Pico bottom. That's okay. I'm not a bottom catcher, so I'm fine with that. I am completely fine with that. But at least I got an entry based on probability. So those are two scenarios, two ways where you can catch a move to that upside. What is the invalidation? That this is not going to get tagged and we're going to go lower. I think it's really, really easy to see. Right here. Right here. Let me put a magnet. Right there. That's the line right there. There's no other line. You basically break below here and you close and open a full candle here. Not just close, because you can easily open and go right back up. That's just a deviation. But I'm talking, you can call that, I call that a signature move, a sweep. I'm talking about a full, you open up, you close a candle here, you open a brand new one here, and you never regain that. That, to me, invalidates all of this here. And my $51,500 target to my $49,000 sweep is going to happen sooner than later. If this were to happen, in my opinion, it's going to happen, but it'll happen sooner if we were to do this. Now, if we do this or just start climbing from here higher, I still believe we're going to come down. It's just going to be from a higher point. So now you have two great trades to do. You have one trade to the upside, whether it's from here or here, and then you have another great pivot, another short trade on the pivot. Well, how do you know where you're going to pivot? I know areas. I know what I'm looking for in the lower time frames is going to give me those signals. And guess who's going to know too? My $25 a month Telegram is going to know because I'm going to call it out. We've been making money every single day in this market, even through being sick. Anybody, all those that are listening that are in my Telegram channel, go ahead and post one day that we haven't made money in the past 4 or 5 days. One day, post it, tag me on it. They can't. Because sick or not, I'm still trading because I don't need to really think. This is like second nature to me. I already know my validation points. I just put them on my chart really fast. I only take the time to explain it to you guys because I'm trying to teach you, not so much teach you, but try to explain to you my thought process because there's a lot more that I don't share with you. There's a lot of indicators, a lot of stuff that I teach my Discord group. I don't teach my Telegram, but I teach in my Discord group my system. But like I've repeated before, like I've told you guys before, I'm not here to teach you guys. I'm here just to give you the points of what I'm looking for, to give you the confidence to say, hey, you know what, I think this guy knows what he's talking about. Let me give him a try. I'm going to sign up for $25 a month, and if he proves to me that he's good, I'm going to take the money that I use there, and I'm going to learn how to fish. I'm going to join his Discord, and then that's how I gain more and more members. So let me see if there's anything else that I haven't covered. I covered the daily time frame. I covered the hourly time frame. So the daily time frame is giving us that macro view of what I'm looking for, and I guess the hourly is showing you the setups on how I'm going to play these moves here. Very important thing that I think also is extremely, extremely important for us to hold is going to be this, guys. Look. I'm going to hide all this. Oh, no, excuse me. I'm going to hide the drawings, keep the indicators. There we go. This, to me, is a do or die line. And there's a smart way to play it, and there's a not so smart way of playing it. You see this white line here, guys? This is the 50 EMA. In my opinion, and I could be wrong, this needs to hold. This needs to close. If we close below the 50 EMA, it is going to be very difficult to, I think, well, put it this way. If it closes and doesn't regain momentum quickly, very strong possibility that we're going down to the next EMA, which is the 100 EMA on the weekly time frame. And that puts us down in that $45,000 target. But once again, I do believe that this area here is going to mark the bottom. So in a perfect world, this is what I would like to see. I would like to see us open a new candle above the 50, on or above the 50. Now, if that were to happen, I would feel much better if we came down and then establish that weekly's wick to the downside. Complete the objectives that we have to the downside, the $51,500 to the $49,000 sweep, and then start heading up. And then all that move, that new candle, that move is just this. It's just this. Normal wick. A normal wick to the downside, and then we start heading back to that $67,000. And you guys have noticed that I've said this 3 times already. $67,000. I'm not looking for anything higher than that. But if I'm a bull, why am I not looking for anything higher? Because again, I cannot afford to allow my bias to enter into trading. All the data points that the top of this channel is resistance, and then we get smacked back down to the bottom until invalidated. So my brain can only think of one thing. We are going to short here. Invalidation, very, very simple. Climb above it, back test, it holds, I exit, I flip to a long. I've said this like a broken record at least 50 times in the past month. It's easy. It's not that difficult. There's few points on this chart that can give us that type of sure trade. It's a sure trade. And I know people think, well, nothing's a sure. Yeah, this is a sure trade. Because a sure trade to me is this. Give me a line where I'm going to risk very little. That's my definition of a sure trade. If I take a short, and this is an automatic short, that's how I trade. Automatic short, because I have 5 months of data telling me that. And you have zero data telling it's going higher other than hopium posts, people who tell you what you want to hear on Twitter. I take a short, it breaks above, it's going to backtest with a 99% probability. I exit my short. Very minimal to zero loss. I go into my long. And for me, it'll be a little bit of a loss because just coming down and backtesting isn't enough. It's got to hold it. And if it holds it, more likely it's going to start moving up higher. That's okay with me. I can easily sacrifice a few percent, no big deal. I'm not trying to catch the bottoms or the tops. But that to me is a very easy trade to take. And there's only a few areas that are that well carved out on this chart that allows me to do that. We're in one of them. Here's another one, and here's another one. Those 3 areas have such strong data and strong reaction that it gives me an easiest trade I can possibly take with the minimalist amount of risk. That to me is an easy trade. So, to conclude the video, just look at a couple of spots for today. Let's see if we get the drop down into here and then the pivot, or if we maintain this area here. Now, this area here, if you look at this area here, let me show you this. What we did here on this bounce is something that I talk about very often. Let me go here. Let me show you. And that's the continuation rule. That's the higher low rule. We had a bounce. We had a low. Let me get the magnet out of here. We have a low right there. And we put the continuation rule. And there we go. We got to respect the continuation. We didn't break. So we came down at the first try. We came down to 382. Second time, 0.50. But do you notice this, guys? Look at that. Again, with the candle bodies. Look at the importance of these candle bodies. Everywhere I look at candle bodies. This is what's telling right here. The unfortunate part about this here and this here, this continuation rule, when we hit these continuation rules, I expect the bounce when the market is strong. This and this bounce here show me the market's weak. Because I've showed you plenty of times when the continuation rule gets hit, what happens? We get an immediate bounce. And what do I tell you about when we invalidate this? We go to the consolidation rule. This is the consolidation rule. When I put this on the chart, that means we're going to come down into here, and most likely, very unlikely, we're just going to bounce. We're going to sit here for a while, and then we start moving. Hopefully, we start moving higher. But I love this rule because this rule is a quick reaction. We all want something fast. We want something quick. Why? Because we don't have time. We're impatient. We need things to happen tomorrow. We want to pay off our house in the next trade, right? So that's why these areas, to me, looking at this reaction here, starts to give me such a shift my short-term bias that we may come down into here before heading higher and knocking out some of those areas there, before we come out and we take that objective to the downside that I've been talking about for the past month. Again, go back to any one of my videos in the past month and tell me where you haven't heard me tell you that 51,500 and $49,000 sweep has not been my target, and 53,900, which we already took out. We took that out, I think this weekend. That was my first target. Again, go to my timeline, go to the videos, and you can listen to it for yourself and take notes, write it down. All right, guys, that's pretty much it, guys. If you want access to my Telegram group, the $25 a month where I give you the calls, the buys and sells, send me a DM, and you can go and you can sign up, or you can just go to this right here. Here's the website. Here's the website. I don't want you to get this from I don't want you to get any information from any comments. People who comment on my post, those are all scammers. So if you get information from them, it is 100% they're going to steal your money. Okay, there's no way around it. BCTG signal. And here's the crazy part about it, guys. As I'm telling you this, most of you guys go, "Oh yeah, I know this." Every week I get a guy send me a DM. "Hey, BC, where's my link? I signed up. Where'd you sign up?" "Oh, I got your link from the comment." Can you believe that, guys? I'm not joking. It's incredible. Ain't fucking credible. It's no different than when you hear people get their identity stolen. In this day and age, it still happens. Well, how do they do it? Well, I got a phone call and he was asking me for my social security number, my date of birth, my mother's maiden name. Why'd you give it to him? Well, he sounded legit. People, you can't fix stupidity. You just can't. Unfortunately, you can't. And as I'm insulting you now, they're still getting people this week or next week, they're going to tell me they got scammed because they clicked on a link in my comments. And I don't know how else to tell them not to do it. I know a lot of you people are saying, well, they deserve it. Yeah, I believe that. I believe when you get scammed, you deserve it. You should know better. And if you don't know better, you shouldn't be in this. If you're not smart enough to know better, then you should not be in crypto. This is the Wild West. This is the Wild West. And you can't be a Midwest farmer join the Wild fucking West. You're going to get eaten alive. You got to be a city folk. You got to be. You got to have wits about you. So don't click on any link that you get from any of my comments. Send me a DM or go directly here. All right, guys. Everyone have a really good day, and I will try to put more of these this week out for you guys. We'll see. Let's see how this plays out today and tomorrow. Have a good one, guys.